Hey guys, what's up? This is Andrew for TRENDLINES.com. So today I'm here to make a midweek update, guys, on AMC because we broke out from the triangle as expected, I told you, and I have a lot of very interesting things I want to show you today. And I hope that after this video, as usual, guys, you would have learned something. So let's get into it. Alright guys, so let's start on the 4 hours time frame as usual. So let me quickly remind you what I was saying in my last video. So I did my last video over the weekend, so it was on Friday's close around 49, and I was telling you that I'm breaking down this move up that started since we have the huge breakout. I call it the huge breakout because this was the biggest resistance we had. So of course I was even bullish before, but since then I was very bullish. I knew the strong move up would come soon. I used fibs to give you the targets where you guys had some reactions. So 35, 26, then I said 65, 75, and then I told you guys that we're probably going to correct to 35. We went to 37, and we having this triangle pattern here that I showed you a few times in my previous videos. So my previous scenario was this one. 1, 2, 3, 4, 5. All right. So my previous scenario was the one that is happening because, as you guys see, so this is the ELLIOTT wave book, guys, rewritten by Presta and Frost. So as you can see in this chapter on triangles, triangle contain 5 overlapping waves that subdivide 3, 3, 3, 3, 3, and are labeled A, B, C, D, E. All right, so I'm using all this information, this theory by ELLIOTT, to actually count my waves and try to predict when the consolidation would be over. So this is the reason why here I actually told you guys that my preferred scenario was we break out right away, then we correct. I'm going to come to this very soon. This is actually the very interesting part of this video, so I'm coming to it very, very soon. I knew the breakout would probably occur, that then we would correct and do 3, 4, 5. So the questions you guys having is, are we going to correct before the strong move up? And if yes, to which level? And when is the strong move up going to happen? Is it before the June expiry or after? So I'm going to try to answer all these questions in this video. So to do that, I need to zoom in. Now making a shorter term analysis, and you're going to see why I need to zoom in. And many things I want to show you guys here. I'm going to try to be as quick as possible because I want to show you everything. Okay, even more. So basically, I need to analyze my first wave. I need to analyze this wave, and I'm going to apply ELLIOTT wave theory again inside this wave, guys. So once again, ELLIOTT wave theory is for me the complete guide to take positions on the market. But to master this theory, you need first to understand all the other techniques that we can use in technical analysis, which is support, resistance first, moving averages, trend lines. Then comes the breakout techniques. You can use fibs as well to find targets and even to enter some trades. And you need to be aware that divergences are very precious information as well that you can use to know when a reversal is going to come. And here, I'm going to show you very soon, we have a little divergence. So first, you do your counting. So 1, 2, 3, 4, 5. Okay. Quite easy, right? It's just very smooth. So you can see from this information, as usual, the third wave is the one that is going to break some major levels. So here, the breakout level, you usually have some increase in the volume. So you can see here, of course, it's where you have the more volume. You also have some more volume here. But the stronger volume over the last week was during this breakout. So it's confirming that it is a breakout and not a fake out, guys. If you have low volumes during a breakout, it's probably that your trend line is not done properly. And that actually it's not a breakout, just a strong move. But if you don't have the volumes associated with the breakout, something is wrong in your drawings. So here, I know that this is confirming that my breakout is correct. This is in the third wave. And look, we have even something more interesting, is that the third wave can be itself broken down into 5 waves. All right. So the third wave is here extended. Keep it like this. Okay. So here the third wave is extended. And guys, look what I want to show you. So, okay, 1, 2, 3, 4, 5, 4, 5. All right. Third wave is extended, is broken down in 5 waves here as well. And look, I go back to my Bible. So here you have a few examples of what ratio we usually see when, for example, the third wave is extended, or the fifth wave, or the first wave. So you have here 3 examples. So in the first example, the third wave is here extended. So you have a 1, then you have 2, and then 1, 2, 3, 4, 5, and then 4 and 5. In this configuration, usually the first wave length is the same as the fifth wave length. All right. So when you know that the third wave is extended, you know that the fifth wave is going to measure roughly the same length as the first wave. So this is very precious information. So now I'm not going to develop here through the second and third example, but they are good to use as well. So have a look at this, guys. Once again, this PDF, you can find it on Google. You just type ELLIOTT wave PDF from Frost and Prechter, and you click on the second or third link. And if you want to get more information, guys, you just click on the link in the description of my video, because this is a sum up of this book. And I think I made it very accessible for you guys to understand, even if you are new to technical analysis. And if you are a confirmed trader in technical analysis, I'm sure you're going to find some good information as well. So this is for everybody. Anyway, so here I'll go back to the charts and look, guys. So here I know the third wave is complete. 1, 2, 3, 4, 5. And then if I want to have information, so I'm just going to use fibs because it's very visual. And you can see, guys, the perfect symmetry. So let me get rid of what is inside. Okay, so I'm going to keep this like this for now. I'm on a 30 minutes time frame. And here you can see that basically the first wave measure from 39 to 46 something. So it's like 7 points. And the fifth wave starts from 58 plus 7 should go to 65, and it's going to 64. All right. So you can see that this information here was very accurate. So here we know that we have complete our fifth wave. We have all the information we want. We could break it down into 5 waves, inside which we found the third wave is extended, and we follow the ratios that are the usual ratios, which means wave 1 equal wave 5 in terms of length. Then what else do we have, guys? I told you just before about divergences. It's a very precious tool. Look at here, guys. Look at here. So let me get rid of this. By the way, look, guys, how the fibs levels are magnets. All right. It was a magnet here. The 33.6% was a magnet. The 44.5 here, same. It was going around it. And inside, of course, this was the third wave. So very impulsive. So it didn't have time to consolidate around those levels. But we might still see some reactions. For example, here at 52. I'm going to come to this very soon, guys. We coming here. You're going to have my view. So I'm going to keep this. I'm going to keep this as well for now. Fourth wave goes here. And so now, guys, divergences. You remember how it works, right? You just connect the highs of the price action and of your momentum indicator, and you try to see if you have something that is not going in the same direction. Here, market making higher highs from 3 to 5, market making higher highs. Look at the MACD, guys. MACD making lower highs. What does it mean? Now you know, guys, you know. It's a bearish regular divergence. It's this one, all right? Market making higher highs, but the momentum indicator is actually decreasing. So we have a loss of momentum. We are losing steam. Bulls are losing confidence. They are not able to take as much ground as before. This is the reason why the momentum indicator is going down. So it's an early signal of a reversal. So coming back to the charts, we're having here our 5 waves complete. They really look like 5 waves. We have the breakout. The third wave is breaking out and is associated with strong volume. We're now having this small, I call it small because we're on a 30 minutes time frame. Look, guys, if I go on an hourly time frame, do I still have a divergence here, guys? Tell me. Look at this. Look at the MACD, guys. Is it going lower? No. So we don't have a divergence on the hourly time frame. We only have a divergence on the 30 minutes time frame. Here the MACD is going lower. What is this telling us? This is telling us that we are going to have a very short-term bearish move. That is going to happen. And that is going to be my ABC, guys. My ABC that I was expecting here. So I have all the signals that are telling me that this market would correct slightly. So it can just happen in 1 or 2 hours. It can be very quick and it doesn't need to be very deep. So here is my scenario, guys. Okay. A, B, C. Easy, right? Once you understand how the market is actually unfolding, which is following the ELLIOTT waves, you have here enough information to make this scenario your preferred scenario. So I think then you can use fibs. So 52 is a level that would make sense, of course. You can also, here on the 30 minutes time frame, you have the 200 period moving average, but the 30 minutes time frame is not very nice time frame to use. I mean, it's not the basic time frames. The basic ones are the daily, 4 hours, and hourly. So we go back on the 4 hours. And then here we know that the moving averages, they are more powerful because they are followed by more traders. And so here, what do you guys see? You see that you have the 20 period moving average. Funny, the 20 period moving average. Look, wasn't it the one that I told you guys that is supporting the price during the strong move up we had here? And that is actually my trailing stop loss, my kind of signal that the market is making a pause. Yes, it's this one, you see? So again, so I can find it as well with the hourly time frame and taking the 50 period one. It should be roughly the same. Okay, so basically those are giving me the same level. So the 50 period on the hourly goes to 52. The 20 goes to 51. The fibs go to 52. So we have enough information, guys. 51, 52, somewhere here, right? So it's probably going to be the levels we're going to correct to. We might also see only correction to 55, the 38.2%, but I doubt this would be the case because I'm still missing my C wave. So I think 51 or 52 coming today, guys. I'm going to post this video at the open, so it's coming today. Once again, it can be very sharp and then strong rebound. An alternative scenario is that this ABC is deeper and that we go as low as 45. This is kind of my lower level, the 78.6%, 45, and it's as well going to be the support created by the old resistance, which was the upper band of my triangle. So this is support as well. So my two levels are 52, let's call it 52 and 45, but 52 is my preferred scenario. All right, so we go to 52, then we strongly bounce back. I think this is what is going to happen. We can also have an extension in the fifth wave, but it's very unlikely as we have divergence on the 30 minutes time frame. But we don't have it on the hourly, so you know it can still happen. It can still happen, but sometime we would need to correct here before making the stronger move up. And I'm pretty sure that this is what is happening. So maybe we're only going to go to 55, but I doubt it as well. All right, quickly, the financial data, guys. So the option market, very, very interesting. So here we were at 50 last time I did it. So we were at 19% of short interest. We are now at 58. So 20%. Look, guys, the 145 strike. Remember, it was 3 million 1 week ago. 3 days ago, it was 8 million. And today, in terms of millions of share, 13 million. Where is it coming from? It's coming from, half is coming from June and the other half is coming from July and all the other maturities. So this means that if the move doesn't absolutely need to happen before June, because even after June, we still have those 145 calls that are going to give us some bullish momentum on the upside. And something I want to show you guys here before I conclude on this. So I think it's interesting to look at the delta as well. This is something I like to do. So you can see that the delta of the 145 strike call for the June maturity is 0, guys. All right. I use Black-Scholes formula as usual, guys. It's here. It's not rocket science. And the delta is 0, but the delta of the July maturity is 41%. So this is giving you some indication about what market makers are pricing. And as far as I'm concerned, I think that 145 would be difficult to reach. I mean, my target is 135. It would be difficult, guys, to reach before the 18th of June, which is roughly here. But it's possible, all right? We could still see this. It's possible, but it's a bit unlikely. And we still have the gamma that we need after the June maturity so that we still have this bullish momentum. As I just showed you guys, this gamma comes, so the 13 million shares here come half from the June maturity, half from the next maturities. So we still have this bullish momentum that is here. What else I wanted to show you? Yeah, in terms of volatility, we are still at very high volatility, guys. 330, I mean, you know, this now is very steady. Market makers are ready for the next move and it's gonna come. So no, not more information here. Yes, what I wanted to show you guys. So this is the distribution of the open interest. So in yellow, you have the number of shares of the total open interest on AMC. Now, let me show you just how the June maturity is looking, because the June maturity is the one that might create the gamma in the tomorrow and the day after tomorrow, because the shorter the maturity is, the higher the gamma is. So just on June, it's looking like this. So the June maturity looks like this. So you need to multiply this by 100. So basically here it's 6 million shares. And what is interesting is to see where we have those gamma positions, those call positions that are creating the gamma. So right now AMC is here at 60. So here you can see at 70, 73, we have 3 million shares, then 100, 3 million shares. So those two levels, if we go close to it or through this tomorrow or the day after tomorrow on the 18th, even worse, I mean, for the market makers, better for us, then it means that this is going to create some strong moves up, like very strong, like, you know, they're going to panic and they're going to buy massively 3 million shares. What is the delta of the 100 strike call? If the delta is 0, it means they need to buy the total number of shares. So the 100 strike is here. The delta is 4%. So they need to buy 3 million. So 96% of 3 million. So roughly 3 million shares. All right, guys. So you can see that this is what is going to create this momentum. And regarding here, I don't have the 14th of June data yet. It's going to be released in 1 or 2 weeks. So I don't have new information. The total short interest was 21% as of the 28th of May. I'm pretty sure it's higher now. And the synthetic short is 21%. So we have a total of 41% short interest, synthetic and regular. I'm not here taking into account the naked shorts, guys. And you know, I know there are a lot of naked shorts. We can't do anything about it. It's actually maybe even good for us because those naked shorts, they would need to cut the position at some point. Another interesting information is that now the market cap of AMC is 26 billion US dollars. Guys, I'm keeping an eye on this. If this gets really too high, you know, I do some basic math. I'm just imagining there are 1 million people in the AMC trade, or let's say 10 million people. All right. If there are 10 million people divided by 10, 1, 2, 3, 4, 5, 6. So it's like around 2,600 US dollar per investor. So it's possible. It's definitely like some money that people can make. And I'm here taking into account 10 million investors. If we go, for example, to 500, it's going to be tough to find all this liquidity. So I'm just keeping an eye on it. We have maybe a cap on the market cap around those levels, you know. I think that is going to become very hard to sustain for retail investors to hold, to keep pushing the price action higher when the market cap is going to be that huge. But for now, we are good, guys. We are good. You know, it's like a few $1,000s per person. If I assume there are 10 million AMC investors, and maybe there are more, and the more it goes higher, the more we're going to attract investors. And even now hedge funds and, you know, some institutional clients, they are getting into the AMC trades and they are creating this buying power as well. So that's it for me. Let me remind you quickly my scenario, guys. My scenario is that we correct slightly here. This is not my preferred scenario. My preferred scenario is this one. We go to 52, we bounce back, we do a strong move up, probably to the 100 area. Not sure it's going to be before June, before the 18th of June or not. Careful as well when your options are expiring. Is it at the open or at the close? It depends. And yeah, I think we're going to have this strong move up coming soon to 135. So this is my view. Let's see what is happening. So I hope you guys enjoyed this video. And if you did, please don't forget to click on the sub, like, and bell button. So you're going to be the first to know when I upload anything new. And stay close to shore. See you guys.